Hey everyone, welcome back to the Broker Life podcast. My name is Mark Penazon and I'm a mortgage broker with Mortgage Connection. I'm licensed in Alberta and BC and have been doing mortgages for over 15 years. Today's guest is Ed Arnone, Regional Business Manager at Equitable Bank. Welcome to the show, Ed.
Thanks for the invite. Appreciate it.
No problem. So why don't we get started, and why don't you tell me and our audience who exactly is Equitable Bank? Who and what are they?
Well, Equitable's been around since 1970. We're at that time called Equitable Trust, mostly doing commercial lending. We recently became a chartered bank in January 2016. And we also recently acquired Concentra Credit Union out of Saskatchewan, made us about the 7th largest bank in Canada right now. We have about 63 billion in assets, and we derive our money from different sources. We have our own deposits, which is our GICs, currently around 5% interest on that. We also have our own savings account, sorry about that, a high interest savings account. So that's really put us on the board. We also get our money from broker deposits. Other sources are deposit notes and liquidity facilities and covered bonds. So if you want to look those up, we'll kind of tell you what that's about.
Okay.
Mostly it's just investors putting money together that we can borrow against, and that's how we lend out our money.
Okay, so we've all heard of the big six banks. So is it fair to say that Equitable is the seventh bank? That you call them the big seven? Would Equitable be there?
Yeah, that's what they're saying in the news. So
okay,
and we're really pushing that end with the technology end of it. We've invested a lot of money in the past year to bring that up to speed. So
okay, so Equitable's a balance sheet lender. They take in deposits, right?
Yeah.
Just like the big six banks, and that's how they get their money basically, and they lend out mortgages. That's how we work together. But Equitable's a little bit different in the sense that they don't have physical branches, right?
Yeah, that's perfect. Yes, and our CEO, Mr. Moore, preaches that all the time. He goes, I want to pass that kind of savings on to the clients by having a no-fee savings accounts for our customers and paying well on our GICs. And we strictly like dealing with brokers. That's our main source of business, and we kind of look after that end of things. And we have a great relationship with Mortgage Connection. That's one of our business partners.
Yeah, and we love you guys too. So what is your role with EQB? You've been there a while. I looked you up, and I think you've been there, what, like 13 years or so?
Yeah, it's actually I think I'm in my 13th year.
Okay.
Before that I cut my teeth in mortgages for probably almost 30 years now.
Wow. Okay.
Yeah, I brokered. I've lent money on the private side with some guys I know, and from there I got approached by as I was brokering, I got approached with Equitable Bank to come on board as a BDM. So yeah,
So you've done what I do. You've been in the sales role, and you've been doing deals and underwriting and all that. So what do you do now? How do you help brokers like me?
I think the main thing is because I've been around for so long, I've seen a lot, especially going the ups and downs in our market. Like I've been through it all. And it's funny, I guess the alt side has changed quite a bit. It used to be a lot easier to get a deal done back when I was brokering. I remember the days they used to write on business for self. Yeah, I make 10,000 a month, and they would accept it. But nowadays you got to really dig into the bank accounts to make it work. And that's something else we can chat about, like what I'm seeing out there. But we'll leave that for later on in the podcast. But yeah, things have changed so much, and interest rates as well. It's kind of reversed. When I first got involved with this stuff, I was seeing 8% on deals, and back on the outside, depending on the credit, that's what we're at now. So it's but unfortunately, houses are worth what 6 times as much as when we were actually doing deals back in 2006. So
isn't that crazy?
Yeah, it is. And then, personally, I have a daughter that's looking to buy a house, and she's qualifying for 500, but good luck trying to find something in there. So
Yeah, and you're out of Calgary, right?
yes, I am in southern Calgary here, or
Yeah.
just in Calgary, but
So do
look
you
after the
cover?
southern region.
Gotcha. Yeah.
Yeah. But I do, I shouldn't say that. For Mortgage Connection, I have you guys up in Edmonton as well. So
Yeah. Good, good. Okay, so basically your role is to support mortgage brokers. And do you support more than one brokerage? Are you assigned specifically to Mortgage Connection, or do you work with multiple brokerages?
I know a lot of people in this industry, but unfortunately, I can't look after everyone. But I still take their calls just because I know them personally. But I do have key accounts that I am supposed to be keying on, which
Gotcha.
which is good. So it's just a different way of my job evolving from what it used to be.
Okay, good. So that's what you do. Now, we kind of talked a little bit about the differences between EQB, but off just the top of your head, you don't have to go into great detail, but what would you say is like a competitive advantage for EQB versus a Scotia, TD, a CIBC, RBC, et cetera? What's one thing that sets you guys apart, or a few
Uh,
things?
well, when I'm strictly going up against the banks, like what we're looking at, I think we do insured business. My rates are always competitive on a 5-year term. Uh, so we're pretty similar in some ways to doing that kind of business with them. They probably have a lot more flexibility because they can do things in the branch that we can't because we're strictly guidelined by the insurers. But with the good thing with us is that we're also an alternative lender. So somebody that doesn't qualify on the bank scales or an uninsured scale, I can take them to my alternative side and get things done that way. And what we do well on the business for self side is been our bread and butter for the last 20 years or so, is that we utilize bank statements. Some of the changes that have taken place though have kind of put us, behind the 8 ball, I guess you want to say, or what I'm used to, because we used to take 3 months of the business for salesperson's bank statements. Now I have to use a year's worth to annualize that income.
Wow.
So it's a little tougher now, and but we still do that well. That's the way we've been taught or learned from what to look for, how to get things done on that side. So I think that's probably what sets us different from a bank.
So you got an A side, you got a B side, or alternative side, and the alternative side has that bank statement, business bank statement approach where you can use deposits instead of tax returns to help qualify self-employed
Yes.
folks. And there's massive upsides to that, right? Because the income is probably a lot higher than what they're reporting.
And yeah, and because let's face it, when somebody's business yourself, they're writing everything off, right? So they don't have to pay the taxes. So when we don't want to see the tax statements when we're underwriting that product, because then we do have to use it or see what they are under writing off, and then that may account for lessening the income. So what we like to look at is just see the deposits going through, and then we leave it up to the broker and the client to kind of come up with a reasonable expense sheet, and we just use a net income to qualify. But again, it's not like forensic audit. It's up to you to kind of say, okay, my expenses are $2,000 or whatever. But it does still have to make sense to us that that's what it is. So
yeah, I can't tell you how much I appreciate this program. When I first learned about it, I've only been a broker for this is my 5th year. I've been in banking for 15 years, but 10 years at one big bank, and there was nothing like that over at where I was. And so just to have this option, and there just seems to be a lot more business for self people over the last decade. More people are kind of, I think, just reaching out. The technology is advancing, so people can do things remotely, and a lot of different businesses. So this program is fantastic. I want to talk a little bit about the the structure of some of the products. So without going into a deep dive of products, let's just talk basics. So I want to talk prepayments and prepayment penalties. So what are the prepayments for your A side? And then what is the penalty structure if you want to get out of those terms, and how does that compare to the big banks?
I on my A side, I think we're one of the better ones because we use term posted rate difference. So if you have a client that's in a 5-year term right now, they're paying me out in the 3rd year. I just take our 3rd year term, subtract it from the 5-year term, and that'll be the difference. It's either that or a 3-month interest prepayment, whatever is the highest. But I shouldn't get all excited about that right now because interest rates have been climbing like crazy right now. So it could be ending up like 2% in some cases. So it might be a little steep to get out of. Now,
in relation to the big banks, though, would it not be still cheaper, or is it kind of close?
Yeah, I think it is because what they're doing, they have a different system of looking at that. I'm not quite sure how they do it, but they don't do a rate differential. I think they use a percentage or something like that. But I know talking with brokers that ours is pretty reasonable to get out of. It's not going to cost them 20 grand or 10 grand in some cases. So, and that's the reason why when rates were going well, we were doing really well with getting switches, to come out because the penalties weren't
bad.
Yeah. So, yeah, we do have a better system on that, I think. And that's one of the things we wanted to preach when we were opening up our insured product. On the alternative side, it's a different story. They use bond rates, and it's a rate differential with that. And and bond rates are all over the place right now. So if you are breaking the term in an alternative deal, it's probably going to be pretty pricey.
Really interesting. Yeah. I didn't know that. But the terms are usually shorter, right? 1, 2, 3-year terms.
Yeah, because on the alternative side, you're always, as a broker, you're always looking at, a short-term solution for that client. Say if you do have a business for self guy and he needs 2 years to qualify on the A side, so you may only put him in on the alternative side for 1 year, and hopefully he's got his taxes done so he can take him to the A side. But on the alternative side also, again, it's like a catch-22. You may have a business for self guy who doesn't want to show that he's making a lot of money, so he's paying the taxes on it. So, it's the sacrifice he makes is to pay the little higher interest rate to get that done. And in some cases that works, especially if he's buying a rental property, like he can write that off too, right? So there's different ways to look at that. And I think as a broker, you have to kind of approach it that way with your client. Say, if you do your taxes, here's what I can get you. But if you aren't, this is, how you do it. So it's their decision eventually. The other thing too, like I don't want to get into, because I've been in this business a long time. If you have somebody with poorer credit, they'll never qualify at a bank. They're always going to be in that realm, but it still gets them into a home. So it's another alternative for them.
Not to put you on the spot, but do you know the minimum beacon offhand on the B side?
You know what? Back in the day, it used to be lower, but now we're sitting at like 680
on the alt side.
On the alt side, yeah.
Really? So you still need 680 to qualify on the alt side?
No. What I'm saying is my average beacon score. That's the kind of deals we're seeing.
I see.
Because they can't qualify on the A side, they're coming to us because of the tax issues or just.
So income. They have decent credit, but they can't qualify for income or other reasons. But what's the minimum credit score you would take on the B side?
We can go under 500.
Okay, there you go. Yeah. So someone who's had maybe not maybe as much income issues, but just maybe bad or no credit, you'll look at those deals too: collections, bankruptcies, consumer proposals, stuff like that.
So we like to say bruised credit. So
bruised, yeah. Okay. That's a nicer way of saying it. Yeah.
But it's understandable because you have somebody that maybe has gone through a bankruptcy, it could be a divorce situation that's kind of put them there, or death in the family. Like there's always circumstances, or maybe they just don't like to pay. I mean, we're still able to look at it, but the thing is with that is sometimes your loan to value, depending how bad the credit is, will be cut, and the interest rate will probably be higher. So they
Right.
always categorize that into, you know, how they qualify. So the risk will dictate the pricing of it.
Nevertheless, a great option. So if they can't qualify on the A side with Equitable or anybody, there's this alternative side of lending where they might need a bigger down payment. Their interest rate's going to be higher, but their credit can be weaker, and you have extended ratios. So in theory, they could,
Yeah,
I don't want to say qualify for more, but I mean, they're going to have more room, more lenience if they have a lot of debt or something, right?
exactly. The other thing too is if what we're finding now, especially in this market, trying to qualify, like a lot of people are taking on part-time jobs. And on the alternative side, we're able to look at that a little better than on the A side, because the A
Hmm.
side, usually they ask for 2 years of it or guaranteed income. And on the alternative side, they'll see what the guy's been making for the last 3 to 6 months and use that. So it's, there's those kind of stretches you can make on the alternative side.
I love it. Absolutely love it. What about prepayment privileges? How much can you pay extra without penalties? A and B
Uh,
side.
the A side's 15 and 15, B side's 20 and 20.
Okay,
So
so 15% increase in payment, 15% lump sum, and then
yeah.
20 and 20 on the B side. So a little more flexible on the B. That's good. You kind of touched a little bit in the opening about other products and services that Equitable does. In the broker channel, we're obviously just doing mortgages. But if someone wanted to go all in with Equitable, they wanted the mortgage there, what other products could they get? Can they get a bank account? Can they get a credit card? Can they get loans, lines of credit, investments?
We are working on a credit card that's might be coming out pretty soon here. Uh, Investments are just, we have RSPs, that kind of thing set up, GICs, but we aren't really, you know, we
In
don't
that
have a
game?
big portfolio in that game. It's
Okay.
it's more or less just, the regular things that we
Banking.
do.
Okay.
Um, the savings account is really nice to have too, because there's no fees to it. So we get a lot of push on that. I
Do
think
people use that as a checkings account, or is it mostly a savings account, like proper
it's
savings?
no, you can use it both ways if you like. There's a lot of flexibility with it to switch it from your account back to that account, like to your
So,
checking account to that account.
so you have a checkings and a savings at Equitable
No, I shouldn't say that, but you can link it to your checking account and use it that way.
at your own bank. Got it.
Yeah.
Okay.
So
All right. So mortgages, savings accounts, GICs, RSPs, any other lending products,
uh
HELOCs or unsecured lines.
no, we don't have those set up.
Okay. And
We do
then
have I shouldn't say that. We do have HELOCs, but it's got to be secured
got it.
and it has to be behind a Equitable Bank mortgage.
Got it. Okay. All right. Any popular products or programs you want to highlight? You did mention the bank statement program on the B side. Anything else that's sort of like a niche or something that we may go specifically to Equitable for, A or B side?
We do have a reverse mortgage product that's been really well, really good competitive with the CHIP program or home equities. What it entails is it. I don't see it much in Alberta because I don't think we have that market here as
Mhm.
well as it does in Ontario and British Columbia. But it's really taken off well, and we're a big competitor with CHIP or home equity. I keep calling it CHIP because of my age, but
I
with
got
home
you.
equity.
Yeah.
But yeah, that product's done really well for us. It also pays well for a broker. I think we pay 200 bips on those things. So I don't know if that's, a way to sway the business, but it helps. The other things are commercial lending. We've done that really well. And like I said, we've been cutting our teeth on that since 1970. Again, we get into really big projects. like apartment buildings going up. And we don't see that much in Alberta, but back in Ontario, it's there. They have opened the market up now, though, to broker side. I'm not sure if you're aware of this, but they'll look at sixplexes, that type of thing.
Hmm.
So then, things around, under $1 million that we never used to look at in Alberta, but now we are. So that helps a lot. Like, because I do get inquiries with that.
So would that still be considered a commercial building? So that's a commercial deal. Would the
Yeah.
broker send that deal in, or is that more of a referral to the EQB, or?
No, you would send it in, you would get paid on it. So
And so we underwrite it just like a residential deal based on income, credit, down payment, loan value?
I'm not 100% sure on that, but I would give you the person involved with that.
Okay.
I would just give you their contact and they would probably set it up. But from what I understand, it is pretty similar to way to underwrite it. It's not, maybe the appraisal might be a little different. I'm not sure, but
Gotcha. Okay. What would you say is the biggest challenge in the mortgage industry right now? Obviously, there's a lot of hot numbers out there with inflation, immigration. You can pick whatever stat you want. It seems a lot of doom and gloom, recession looming. And just in your opinion, with your experience, different roles over the years, how do you kind of see the market or the industry right now, and what are the challenges that you sort of see?
that's a good question.
Yeah.
Okay, so some of the things I've experienced lately in the past year is that I'm being involved in the in the problem or getting the deal done more. Before, it used to be my role was to take you out for lunch and feed you a couple of drinks and I get a deal. But now it's Ed, I need help on a file to either get closed or to get over this hurdle dealing with down payment issues, dealing with income issues. It's funny, because I know a lot of people and we talk within amongst ourselves in our industry. Other BDMs are seeing the same thing. They're being dragged in on deals a lot more, and it's kind of taking away from our role. But we understand your predicament, and you're like friends to us. So yeah, we want to help you out. But what I'm seeing is because of the interest rates being higher, because of the qualifications that the government has put on us or OSFI has put on us to qualify, it's opening up a lot more fraudulent type deals. And I even heard this I was at a function a couple weeks ago, and the insurers were telling me this. Like, Alberta's actually, because we're doing more insured business in Alberta, is that we're seeing a lot more fraud now. And you know, it's just, I think people are needing to get into a home, or or you're drawing that kind of person that's kind of maybe wanting to do that kind of business. How can I put that? But so it is promoting fraud, I guess, because it's harder to qualify now. So some of the stories I'm hearing is realtors are looking for brokers that can get paper together. But the amount of time it's taking to underwrite now to go through that to make sure that's not happening, deals are taking a little bit longer to underwrite. Um, so yeah, that's probably the biggest issue right now. Just checking those boxes. There's so many checks now that we get. It's called Citadel hits, where we plug in the name and all of a sudden this will come back. And what that is, it's a channel for lenders to put in files that they come across, or using that person's name or an address or a realtor's name. And if that shows up on our file that we're underwriting, more due diligence is acquired. So yeah, that's been another hurdle. Like, all of a sudden you think your deal's done and you get a call and say, hey, I need another 3 months worth of bank statements. And we can't really tell you the reasoning why, but something's come up. And that's kind of what I tell you guys when you phone me. Say, well, like, I can go on our portal and find out, but I can't really tell you the reason. But I can say, hey, something got flagged here, so we have to do extra due diligence. So that's been a hurdle. The other thing too is a lot of buyers from other provinces are coming here because housing is affordable. So especially in the springtime, we were getting tons of people from Ontario saying that they could work remotely, and then you phone their employers, they have no idea what's going on. So, no, that's not happening. So, you call them on that. But again, it's affordability of housing. So, that's good for Alberta or bad. Like, it's not good for my daughter who wants to buy a house, but
Yeah.
because
Interesting.
that's driving the market up, right? So
That's very interesting. So basically, you're having fraud issues, and you're being pulled into deals because deals are harder to get done because guidelines are tighter, and they're tighter
yeah,
because there's much more regulation and issues in the economy. And then also you're having immigration into or migration into the province because it's so expensive in other parts of the country. So now you're just overwhelmed with volume, complicated deals, and inevitably fraud
yeah,
finds its way in there.
and let's face it, on the market, there's nothing for sale too. I think,
And supply issues, right?
yeah, that's been a huge issue. So yeah, there's a lot more challenges than when it was 10 years ago.
Okay, so let's flip it now. So what is maybe a tip or two that you could give someone looking to get into the market? Maybe, you're talking to your daughter and you're trying to say, you know, make sure you have your ducks in a row, or make sure you do this, make sure you do that. Like, what are some tips from your angle, your experience, that you'd give someone looking to buy a home?
Well, I think, talking with people I know, like I think anytime's good to buy a home, because I can't see prices going down if that's what you're waiting for. If anything, everything's going up, right? Uh, Unfortunately, I'm not sure about interest. I know you asked me a question about the interest rates, and I was told that I was talking, I think, with Imran, and they were predicting back in January, by the summer or July, we should start to see rates coming back down to 3.25 or something like that. But
Wow.
that's not happening.
Yeah, no way.
I really don't know how to. I don't know if rates are going to keep going up. I mean, we just recently went up on our 5-year to 5.29 with most monolines. So yeah, who knows? We might be up to 6% by December. So, but I think my advice is, if you can get into the market, get into it, and because real estate, I think, has always been a good investment for people. And that's been my experience with, some of my friends who've done really well and with themselves, is, buying investment properties, and and dumping them at the right time, or just keeping them to have an extra income.
Hmm.
So that's my advice to my daughter. If you can get in, let's get in. And if it requires more down payment, yeah, I guess Bank of Dad's got to help out. But
Hmm. Which is another problem, right? I mean, a lot of
yeah,
these gifts, especially in BC and in Ontario, where these baby boomers are basically just unloading part of their retirement to their kids because kids can't afford homes, and that's just fueling more issues on both sides, right?
but again, that's opening up our reverse mortgage product, right? So that's another reason why that product's done really well. And
Hmm.
I think for that reason, because when I first bought my home, what is that, 100,000, I think, in St. Albert, actually. And now I'm looking at my daughter, and she's like 6 times as much. So it's
And income hasn't really kept up either, right? I mean, wages
no,
aren't going at the same pace as house prices. House prices have what, doubled in the last year in some places in the country. So
yeah, as a younger person, yeah, I don't think I'd want to go through it, especially with a family too. Like,
yeah.
I know I'm digressing or going backwards on this, but some of my counterparts in Ontario are younger guys who are, mid-30s. They have 2 kids. Him and his wife are working both jobs, making, say 300,000. But 1,200 bucks a month are going to child daycare. So, you're making more, but are you really getting ahead? That's the tough thing. Like, because you
Yeah.
got all these other, cost of living kind of things.
Well, I
So
have a funny feeling that the election in 2025 will be interesting. Let's put it that way. And not to put all the blame on the government, but I mean, things are expensive and they keep getting expensive, and it doesn't seem like we're getting any help. So that's a separate kind of podcast
Yeah,
probably.
that's a yeah.
Yeah.
But
But
you put that in perspective also, like, some of the regulations they're putting in place is opening the door to kind of, like I said, with the fraud issues,
mhm.
because people are desperate and they're trying to get into something, and you know, and you maybe have some people that are walking that line who don't mind pushing those envelopes to get it done. So
Mhm.
that causes issues.
It's unfortunate. Yeah.
Yeah.
What kind of trends are you seeing in the broker space, in terms of like where this industry is going? I kind of like to segue this into AI a little bit and just technology in general. But I mean, I see ads all the time for like Rocket Mortgage, get your mortgage in 2 minutes online. And what's Equitable doing in the sort of tech space? How are they? And I know you guys just launched a portal last year, I think maybe 2 years ago, for brokers. So now we have the portal to basically follow the file along and communicate. And so, versus just picking up the phone, talking to your underwriter, we have this online portal. What are you hearing on the streets internally? What's Equitable doing to kind of stay relevant in the tech AI, space?
Uh, that's tough because I know other lenders are using a portal too. So I think, again, one of the reasons for that, I think, is to try and stop, to the fraud issue too. That's another reason that portal was brought in, and the share tool for bank statements.
Mhm.
So that's something that you pass along to your client, and they plug in the numbers where everything from the bank is just generated right to the portal for the underwriter to look at.
So bank
So
statements can't
that's
be manipulated or anything like that, right?
yes, yeah. Because back in the day, there's so many times we got bank statements and there's things are crossed out on it, like blacked out, so you can't see who made the deposit or something like that,
Yeah.
or lines taken out. So that's another reason why that technology has come into play. Um, Me personally, I do see the AI thing. I mean, me as a BDM, I'm getting, on a CRM, they call it, where I have to plug in my visits or who I talk to, that kind of thing. I'm lucky they give me a lot of leeway on that because I forget half the time to plug it in. But but uh, but I see things trending that way, and I've been at like 2 presentations with other brokerages, and they've had AI guys come in, where you talk on your phone and it relates the email to that client. Like, there's some really neat things going on. Um, but me personally, I like talking with people, and I think, I don't want to say the generations though, but some of the underwriters we have now are younger generations, and especially if there's a confrontation involved, like on a file, and they rather just deal with an email or a text, which to me, I like hitting things head on, and trying to solve the problems. So I don't know if that's good and bad, right? Like, you still need that people touch, I think, to make things work. But who am I?
Well, but that's the conundrum, right? I mean, AI is
Yeah,
coming. It's already here. I mean, it's involved in investing. It's involved in all sorts of, like, GPT is out now. Now you can write an essay and not actually write an essay and hand it in for your school project and stuff. And
yeah,
you can build checklists. You can build. I mean, there's so many advantages of it, yet the human element is completely out of it. And so we're all humans. We're going to stay human, presumably, in the next, little while. So how do we manage this sort of mix between not just technology, like a cell phone's great, but a cell phone that can actually do things and you don't really need to use your brain as much. So are we going to become less like phased out in a way? It's like Terminator 2 all over again, or is it, more of a space where brokers and bankers and lenders are always going to need people, similar to the real estate industry, where realtors are showing homes all the time, they're writing contracts. Do they need to be involved? Can there not just be technology on the home where people can just
yeah,
enter a
like
code in, go in the house, and but then you're
like a
dealing with like
virtual, yeah, like a virtual way of doing things.
Yeah.
I think it's a fact of life, and we're gonna, I guess we have to deal with it. It's just, I don't know what to say. Like, I don't, me personally, I still want to touch something, even,
Yeah.
but, we used to say that with department stores, going into the bay or something to buy clothes or whatever. Now you just go to Amazon, you can pick things
Yeah.
off there.
Yeah.
So I think things will be changing, and as brokers, we have to adapt to that, I guess. Because I remember when, brokers would always want to try and meet the client. Now nobody wants to go meet them. Like, it's, I shouldn't say it like that, but I'm just saying, like, a lot of them just say, oh no, I can do it remotely. I know brokers that work out of the country for 6 months
Yeah.
and
Yeah.
still get things, and
Yeah.
they're still busy.
We got one in our team who's in Mexico, right?
Yeah.
Yeah, Monsi. So, and it's funny because back in my CIBC days as a mortgage specialist, I was going everywhere in Edmonton. I was driving out in the middle of winter to like Pigeon Lake to go and help a client for an application, and nothing would come of it. And that's like 4 hours of my day just doing that, and I'd go everywhere, and we'd have to have everybody sign in person, and you'd have to print the documents off at home, go to their house with your laptop, and then it kind of slowly started to get a little better, but it wasn't really great. And then it wasn't really until I got into the broker space where, you didn't have to do any of that stuff. And then COVID hit, and then it was like, well, now you can't go see people, and now you have to use Zoom, and now you have to
Yeah.
use DocuSign. And I don't think a lot of people are going back because we've all realized, myself included, it is way more efficient. Now, we have this human part right now. You and I are face to face, but we're not really face to face. We can't shake hands and,
Yeah.
pat yourself on the back and say good job or whatever. But at least there's a little bit of a human element. But in terms of efficiency, if I can sit at my desk and if I can do 6 deals in 6 hours and not have to meet or go anywhere, I mean, compare that to maybe one or two having to travel around the city. And so, from an efficiency standpoint, I don't see it going the other way. And
No,
if there is someone more old school that wants to go face to face, I think they're just going to be at a disadvantage. You got a 20-year-old getting into the broker space right
no,
now.
they
I
aren't going
mean,
to do that. Yeah.
no way. I mean, no way. So that's interesting. So one last thing on tech. So you've been there 13 years with Equitable. What have you seen from when you first started to now in terms of internal technology upgrades, even like internal systems or software or just the way people talk about it? Like, have you seen big changes, or has it been a pretty low level of change, like consistent? We don't make changes. We don't want to do a lot.
I think as lenders, the technology is expensive. So to turn that right around, it takes time and, like I say, a lot of money to go that way.
Mm-hmm.
We recently have invested quite a bit in making our system more efficient, but there's still things that aren't done properly, I feel. And of course my underwriters complain to me, like, sometimes you have to put things in twice for when we get an application. So again, that's not efficient for them for underwriting time. Other lenders, have invested tons of money, or they're newer coming into the market, and they have a better system. So I think we realize that. We know we have to invest in that, but it's a time thing. Like, there's a lot
Time
of,
and money. Yeah.
yeah. So I guess that's probably the worst thing. But it's funny, getting back to DocuSign. Forever we were always wanting a wet signature, but you know, realistically, you can't really do that anymore.
Especially when there's like tighter timelines, like
Oh
BC,
yeah.
there's like no condition of financing. You need things like now, and you got to be competitive. I wanted to ask you one last question. It's a hard question, and I know you may not have the answer, and I know that you know what I'm going to ask you here. And you're not an economist. I know you can't predict things, but you're a lender. You've been around a while. I have my views on interest rates. You got your views. We've had extremely low interest rates throughout COVID. I remember selling
Yeah, I remember.
1.5%
Going
rates.
crazy. Yeah.
Crazy. We're probably never not going back there anytime soon. And now we're having higher interest rates, and I think people sometimes take it out of context, a 5% rate is certainly higher than 1%. But really, the pre-COVID rates were what, like 3.5%, something like that.
Yep. Yep.
So it's just slightly elevated, and really they've been low for like a decade. And before that, if you go 2008 and prior, I mean, rates were way higher, right? I mean, go all the way back to the 70s. So, rates are higher, sure. Where do you think we're going to end up here in the next 5 years or so? Do you think this is a new baseline? Inflation's come down quite a bit. We're at what, 3.4%. So we're almost in that 1 to 3% range. And it looks like if you look on a chart, whenever inflation comes down, usually the Bank of Canada also drops their rate eventually. But how much? Do you think it's going to be, right around 1% or so, or do you think it's going to be a bigger dive back to 3%, 2%? Or do you think this is like sort of the new base? And again, no one's holding you at your word here. It's not
Better not.
yeah, this is just an opinion. Do you have an opinion on it, or what do you think?
I think a lot of things depend on the world market too. Like, we started seeing all these climbs with the Ukraine war coming on. The politics in the States, I think, affect us quite a bit too.
Yeah.
To put a rate mark on it though, I'm kind of hoping we come back down to below 4. Like,
Yeah.
I think that might be realistic, but again, it depends on what the rest, all the economies are doing. And with all these natural disasters too, I guess that might have something effect on it. Like, I know my insurance rates have gone up, but
Yeah.
but and like I said, I was talking with Imran there with Sajan, and like he was predicting that in January, like 3.75, he thought they would start to come down, but yeah, it's not. I'm kind of hoping we hover around the 5% mark for the next year.
Yeah.
And then maybe we start to see a bit of decrease.
Yeah. And I think you're right. People just have to get used to this. I mean, we've been spoiled with low rates for a long, long time, and costs are higher. Banks spending more money. Bank Canada is printing a lot of money. So, the costs are just going to be higher. And that's just the way it is until a lot more homes get built and maybe immigration slows down a little, where now there's more supply and the demand slows. But that's a fair answer, and yeah, I didn't mean to put you on the spot there, but it's always good to get the lender's take.
It's interesting though too, because you have, say you bought remember, well, you were there when we had rates at 2%, 1.6 or so. Now in what, 3 or 4 years, those deals are maturing, right? And their house, well, their equity may have increased, but still, you're still getting the $700,000 mortgage at what, 5% now. Yeah. So that's quite a hit on your family income.
Huge.
So, I think as lenders, we may see an increase with delinquency. I'm hoping not, but it's like a wheel that keeps turning, right? That you're chasing your tail, I think, as a consumer. So yeah, and and again, I mean, that's why they put the stress test in, to qualify at 7% now, but still.
Yeah, and so I guess you were still qualifying at 5% when we're selling the 2% rates, right? So now you're qualifying roughly 2% higher if you have to renew, or hopefully not higher than that. So yeah, I mean, we're decently positioned to handle that debt load, but nevertheless, they're probably going to double their rate, and that's going to be interesting to see how that falls out in the next few years. Okay, time for the speed round. So this is the last part of the interview. There's about 10 questions here I ask every person I have on the show here, and it's just more of a fun way to end the call. So no pressure, just first thing that comes to your mind. Just curious to know who Ed is a little bit more. Ready to go?
Yeah, let's try it.
Okay, so house or condo?
What, to buy or own, or what?
What do you prefer?
I think a house.
Okay, fixed or variable?
For me, fixed.
Fixed?
Yeah.
Now or just in general?
Hello?
Oh.
I think fixed for me, because you can balance your budget and I'm safe. I don't know. just balance your budget more. I know variable, if you want to pay your house off quicker, yeah, go for it. So
Okay, good. Big city or small town?
somewhere in the middle. Does that make sense?
A medium city, okay.
Yeah.
Bank
I
or
like the
non-bank?
city amenities, but I like running to the mountains. So
Yeah. So you're in a good spot at Calgary then, right?
yeah, yeah.
Yeah. Bank or non-bank?
Uh, I think I think that's tough.
Yeah, I know.
Probably because I work for Apple, I should say non-bank, but personally, I've been with bank 25 years, so it's, yeah, I'm not going to change now.
Financial advisor or self-brokerage? So in other words, do you want to pay someone to manage your finances or do you want to do it yourself?
Uh, I do a little of both. If you're asking personally, right? I do a
Yeah.
little of both. Yeah.
You're going to be down the middle this whole way, aren't you?
Yeah, I'm sorry, I'm wishy-washy here.
This next one's fun too. More money or more time? Kind of a trick question.
I think time. I think you have to balance that. And when I'm making more money, yeah, you kind of lose out on the other time, right? And
Yeah.
I think as a younger person with a family, that's important. Like I mean, you're there now, you have small kids, and I
Yeah.
think it's important you spend time with them.
Yeah.
You got to balance that stuff.
But we need money to be able to afford
I know.
daycare. So
So
yeah. If you could live anywhere in the world, where would it be?
I, that's tough too. Uh, I would, I'd like someplace warmer. I could go to Italy. That'd be a nice spot.
Yeah, the
Yeah,
homeland.
the homeland. Yeah.
Yeah. It's not a bad pick. There's a lot of Instagram things I follow, like different pages and stuff, and one of them is Italy something, but it just takes pictures of like different landscapes in Italy, the mountains, the oceans
Yeah, I
and stuff,
follow
and
that. I follow those too.
yeah, oh, it's just so beautiful there. What's your favorite hobby or pastime?
I do a lot of biking, like mountain biking, some road biking. I'm pretty outdoorsy guy, so I'd probably hike a lot. I do hike a lot. I have 3 kayaks,
Oh wow.
6 bikes.
You got kids?
My daughter is old, so
Okay,
I'm older. I'm an old guy, but
right.
I have one daughter. She's 28.
Okay, so you can do things on your own and stuff. Okay.
Yeah, so I'm lucky now.
Couple more. What kind of music you listening to these days? Bands, artists, genres?
Uh, I was brought up on jazz. My dad was a jazz musician, actually.
Oh, really?
Yeah, and so I do appreciate jazz. Um, you might laugh, but I like EDM music.
I will not laugh. I love EDM music. Any favorites? Like Tiesto, Deadmau5? Like who you listening
Yeah,
to?
I like Tiesto. I'm not a Dead Mouse fan so much, but yeah, Ricky Romero, I like him. So
Write that one down.
yeah, yeah, I'd listen to. I think because I don't listen to a lot of words, because maybe that's the jazz bringing up. And I took piano for forever when I was a kid. I hated it. Anyways, like your father kind of beat you to take music.
Yeah, that's cool though.
And I didn't get the gene, but my daughter did, and so did my sister. So
Mm,
I'd rather
very
play
cool.
soccer.
Last one for you. What's the last book you read?
I'm currently reading Churchill's books from World War II, what he like his memoirs from World War II.
Oh,
So
cool.
yeah, it's I don't know, I like history a lot, so I read a lot of history stuff.
Do you prefer like a physical book or do you do like the Audible sort of online
No,
read stuff?
I like a physical book because it kind of puts me to sleep at night.
Yeah,
So I'll probably read a chapter a night kind of thing, just kind of gets my mind off everything to relax.
good kind of night routine. Yeah.
Yeah, but I
Okay.
do appreciate history a lot. kind of always been my thing when I was a kid growing up too. Because I'm originally from Hamilton, that's where I grew up. And, there's a lot of history there, Upper and Lower Canada, that kind of thing, world of, the War of 1812. So I don't know, I just kind of appreciated that growing up.
Yeah. Hey, man. That's cool. That's super cool. So I know you kind of work with brokers primarily, but where can people find you? Do you have an Instagram following, or where can they find Equitable Bank?
I think just reaching out to me personally with my emails at EQ Bank, and then my last name, Arnone at eqbank.ca is a good way to reach me, or phone.
Okay. And then what about EQ? Is it eq.ca or is it equitablebank.ca?
It's eqbank.ca.
eqbank.ca. So
Yeah.
if they want to learn more about the bank, they'll look there.
Yeah. The other thing I think you were asking me about is like current clients, if they want to find out more about their account or something. We do have, our customer service line is really good. The other thing is to get themselves signed up with an account so they can access their mortgage really helps. And they can phone customer service to do that.
Perfect. Well, appreciate your time. Thanks for coming on today, Ed.
Yeah, thanks, Mark.